All right, so y'all are live. Oh wait, what's playing in the background? All right, here you are
Where's
live.
where's the? Are you gonna come up and?
Here's live right now, baby.
Oh, okay.
Yeah, so it's right here. All right, guys. So Carol is gonna help me run this stream today. We got Jerome Powell speaking at 12:30 Eastern Standard Time. Let me put the screen up so it's a little bit more clear here. There we go. That's better. Sorry, we got an echo. Let me fix the echo. Mute the background. Hey, what's up, guys? What's up? Relaxing, Anto, Travel with Marty, Jay, Kevin. Yeah, so we got Powell speaking. We got the crypto conference going live as well. Powell's scheduled to speak here, and I wanted to check something real quick. Hold on. Watch out, baby. Carol's going to manage the stream. This economic conference is scheduled to start in like 5 minutes. I'll have to come back and check on it a little bit closer. But yeah, Powell's set to speak. He's supposed to speak regarding the economy. You know, we had payroll data come out earlier than expected. I was kind of teaching Carol a little bit about economics. And so, yeah, let us know if we're running good. They still haven't started this yet, but I'm going to mute the background just in case. You can't hear Pawn, can you?
Mm-mm.
Okay. Yeah, all good.
No, I do. Yeah, I hear him. Hey,
Okay.
Pawn. Okay.
It's working?
Yeah, it's working.
Okay, so I'm going to unmute Pawn in the background. Let's see if this chat can hear. Say something, Pawn.
Hey, what's going on, everybody?
All right, cool.
Yeah, I could hear him.
All right, guys. So yeah, I'll be back. Carol's gonna manage the stream and kind of, you know, I gave her kind of like a cheat sheet list. Just go through all this stuff here. Answer the questions in chat. The actual speech. Let me get a timer up too. Hold on. So we got about 27 minutes left. I'll put a timer up on screen. 26 minutes is what we'll call it. Or actually, we got like 25.5 minutes. There we go. All right, so we got a couple minutes left until Powell is scheduled to speak. And I'll put the timer right there. And yeah, baby, just yell at me if you need me. And I love you.
Love you. Just leave the door open.
Okay, yeah, I'll leave it open. I'll try.
Just in case.
All right, look, here's the cheat sheet. Here's where Pawn is connected to Pawn right there.
Okay.
None of this stuff should matter.
Yeah, I'm here in
watch
the
the
background. So.
Okay, so here's the chat. I'll pop this out so you can see it. All right, and then I can just kind of keep this like here, like this.
All right. Hey, guys.
All right, you see all this stuff. Ignore everything above this, and there you go.
Okay.
All right, guys. Yeah, we'll see how this goes. Also, don't let them talk you into clicking any buttons in TOS. You know, don't let them talk you into hitting any like Control Alt like keywords. Like, don't do any of that stuff. Okay. Don't let them talk you into.
Yeah,
All right, baby.
John. Well, I need to send a digital slap over.
Okay.
Say
I got
that.
my phone.
Hang on. Say that again, Pawn.
I said, well, I need to send a digital slap over.
Digital slap. Oh.
Yeah. Yeah.
Okay.
All right. I love you.
There we go. All right. Love you.
Love you.
All right. John's OCD kicking in. Yeah, he's got all of this set up. I have no idea how he manages all this. All right.
Yeah, Carol. Hopefully, we won't have the delay that we had last time. That was pretty bad.
Yeah, he told me about it. So, yeah, if that happens, I'm going to have to call him in here. So, all right. Yeah, so anyways, here's John's cheat sheet. He told me to go over this with y'all. So he said, before we begin, let's set the stage by discussing where the markets stand today and the key economic developments leading up to this event. Market context and recent developments. This morning payroll report, which was about 8:30 this morning Eastern time, and non-farm payrolls. So that was 151K versus 180K expected. The previous was 229K, revised down from 257K or 1,000. Unemployment rate was 3.9 versus 3.8 expected. The previous was 3.7. Wage growth was it was zero point 0.1 versus 0.2 expected. The previous was 0.6. Wage growth, I guess year over year, was 4.1 versus 4.4 which was expected. The previous was 4.3. Labor market participation was 62.5% versus 62.6% prior. Immediate market reaction to payroll data. The S&P 500 futures initially spiked but then pulled back as markets reassessed rate path. The NASDAQ futures are up slightly as lower wage growth supports a more dovish Fed outlook. The U.S. 10-year Treasury yield dropped from 4.24% to 4.18% post-data, reflecting a softer labor market concerns. Dollar index was lower as the Fed rate cut expectations increased. What this means for the Fed and Powell's stance today: this is the weakest jobs report in over a year, confirming a cooling labor market. Wage growth slowing eases inflation concerns, a key focus for the Fed. The market is now pricing a 70% probability of a rate cut by June 2024, up from 50% yesterday. If Powell hits at a shift towards dovish policy, expect equities to rise and yields to fall further. The key themes for Powell's speech would be the Federal Reserve's stance on inflation and interest rates. With inflation trending lower but still above the 2% target, the Fed will likely pause longer or shorter. With the inflation trending lower but still above 2% target, will the Fed pause longer or start signaling cuts? The latest PCE inflation data came in at 2.8% year over year, a decline but still above the Fed's comfort zone. Powell may emphasize what the Fed is in no rush to cut rate. Fed may emphasize that the rate. Sorry, guys. I lost my place. Powell may emphasize that the Fed is in no rush to cut rates prematurely. Labor market and employment conditions. Powell will likely reference today's weaker payrolls report as evidence of a softening job market. However, the unemployment rate still ticking up to 3.9% could raise concerns about the economy slowing more than expected. The financial conditions and market volatility. The recent equity rallies show markets expect rate cuts sooner, but Powell may push back against this assumption. Treasury yields will come down sharply, easing financial conditions. Powell may address whether this aligns with the Fed's policy objectives. Geopolitical risk and macro uncertainty. Global risks, China, Europe, and the supply chain issues will remain a wild card for economic growth. Powell might reinforce that global uncertainty is a reason to remain cautious on policy shifts. The key questions for Powell might be asked today. With today's weak job report, the Fed is more inclined to cut rates in June or wait longer. Markets are pricing in a 3 to 4 rate cuts in 2024. Does this align with the Fed's current outlook? If inflation remains above 2% but the economy weakens, would the Fed prioritize growth over price stability? Does recent decline in long-term yields reflect expectations that the Fed will ease policy, and is this movement premature? How does the Fed view geopolitical risks in sharpening monetary policy decisions? What to watch for in Powell's tone and language. If Powell is hawkish, which means him pushing for a higher interest rate to combat a strong labor market and high inflation, expect him to emphasize that inflation risks remain elevated and that rate cuts are not imminent. If Powell is dovish, or if he is fearful that the economic weakness and ultimately wants to lower rates to stimulate the labor market and economy, he may acknowledge that the economic weakness is becoming a concern, paving the way for rate cuts sooner than expected. If Powell is neutral, he will keep a balanced approach, reiterating that policy remains data dependent with no pre-commitments to cuts. And the closing statement and takeaways for the investors is, quote, as we listen to Powell today, the key takeaways will be whether he acknowledges the growing weakness in the labor market and how he balances inflation concerns against the need to support growth, or whether he validates how he validates market expectations of rate cuts starting mid-year. The markets are on edge. Equities, bonds, and the dollar will react immediately to Powell's remarks. Stay tuned as we break down his key points and market reactions live. That's it. That was what John gave me in my little cheat sheet here.
You did good covering it there, that's for sure.
Thanks. I'm not used to doing this like John is, so I'm kind of definitely new to this.
Yeah, they're saying my mic is a little hot, so I might be a little light on how much I'm cutting in on you here.
Oh, no, you're good. I could hear you.
But yeah, it's been a crazy red day so far today. I was surprised the 20,000 ended up breaking down, and we're continuing to break down. So be interesting to see what happens with Powell speaking here.
Right. Oh, thanks, chat. I appreciate y'all kind of cheering me on here. So.
Yeah, they're saying your mic is a little too quiet. I don't know if you see a volume there that you might be able to turn it up a little.
Here, I'll get kind of closer. Is that better?
Yeah, that comes through a lot better, seems like.
All right. Yep, and for everyone, I'm John's wife, kind of filling in today, just in case. I see a lot of people saying, hey, who's this chick sitting in for John? Just to preface, I have some basic kind of knowledge. John kind of fills me in and updates me, but I don't have the in-depth knowledge that he has. So if y'all have any questions for him, I'll direct them to Pawn, or John will be back in a little bit. So. Ooh. I did something.
We're trying to find a little bit of a low here. We'll see though.
I can't get the. Sorry, Pawn. I'm gonna get John a new mouse for.
Everybody wanting to know if John's cutting the grass. No, John's actually on Top Step right now, so Carol's helping to fill in.
There we go. Yeah, he'll be back in a little bit here. Yeah, I think our neighbor's having their, getting their yard cut. No, I do not know the top step pitch. He didn't put that in my cheat sheet, so.
So how's everybody out there doing today? Hopefully staying green. It's been a wild market.
Yeah, and if there's any stocks or anything that y'all want me to pull up, just let me know, and I could put them on the main screen. Yeah, John told me that y'all would maybe try to get me to make some risky trades or to do something crazy. He said not to do it, so that's what I got to do. Not gonna make any crazy moves or anything here. Third best trader in the world. Third best wife in the world for filling in, huh? VIX. Let me see. Sorry guys, they're kind of by the side of our house, so hopefully they'll be done in a second. Say I doubled his account. He would not believe me. Yeah, I mean, if that's what he's interested in, and if Jack is passionate about it, I would let him do that to take over the channel. But I think that this was kind of a labor of love for John, and so I think you got to be into it and dedicated to really do this, you know.
Yeah, hey Tiny. Sorry, it's been a little crazy trying to get everything set up here. We had a little flub with me trying to get it on desktop, so.
Hey Tiny. It's been a while, but I hope you're doing well.
Eric over here saying John's had a glow up.
A glow up? He's always been pretty cute, though. I don't know. I mean, I know that. I'm sure that the ladies in the chat would agree with me, but all about the haircut drama. I feel like every time John gets his haircut, there's haircut drama, you know?
Yeah, so John been teaching you a little bit more with some of the trading and stuff. I know you were kind of getting into it there for a little bit.
Yeah, I was doing kind of like some swing trading and kind of scalping, quick in and out type stuff, but I don't feel like I'm sure enough to really, you know, really try to do it. I have to have John kind of standing over my shoulder, you know, not confident like John is, at least, you know.
Yeah. Yeah, I mean, that just takes a little time there, and just getting in and out of the market, you kind of see how things are going.
Right.
But yeah, no, I know you were kind of looking at starting to trade a little bit here and there. He was saying he was kind of trying to show you some things.
Yeah, no, he has, I mean, throughout the years, every now and then I'll sit down with him and kind of watch him, but, you know, life happens and kids and anything under the sun, and so
Yeah, I know all about that. I got my oldest getting ready to head off on a trip. We got to go get her out of school here in just a second. So,
okay, where's she heading?
she's going on a church camp thing.
Oh, fun. Oh, well, that's fun. Good for her. Yeah.
Yeah, it'll be her first overnight.
Oh, really? Oh, that's exciting. I'm sure y'all are nervous. You know.
I'm let her go. She's good.
Yeah, okay, well, good. You always have that one. I know our oldest is kind of like, I, I trust that she's going to make good decisions and she's not going to get herself into trouble and she's not going to make any dumb decisions that might hurt her or someone else. With our youngest, it's a little different, you know, but yeah, that's good. It's a good experience for them. So, BTC.
Yeah, BTC is Bitcoin, so everyone can kind of see Bitcoin.
Do I ever get bored about hearing about jujitsu? Sometimes, but I know that he's passionate about it, and he looks great. You know, since he started doing that jujitsu, he looks good. So, sorry guys. Yeah, so our kids, we have a 15-year-old daughter, and then we have like an 11-year-old son. And actually, our daughter she went to Hawaii on a school trip. I had never heard about school trips going to Hawaii, but she's been there since last Saturday, so almost a week. And so I think she's ready to be home. So yeah, John warned me about you, Pew Pew Poom 2. He said, don't let anyone talk you into buying anything, so that's what I'm going to do.
And yeah, he straight gave her the warning.
Yep, that's the rule. It's the law. So
We do seem to be finding a bottom, though. I might want to maybe attempt a long. I don't know. I might stay hands off until Powell starts, though.
yeah, it seems like everything's really dropping.
Yeah, it's been a really red day, but I'm more of a short bias trader, so it's been pretty good on my end. I can't complain.
Good, yeah. All right, so about 5 minutes, a little bit over 5 minutes until Powell starts. Yeah, John's, that's not him outside with the blower. John's on top step right now, but he'll be in a few minutes.
Yeah, John's pulling double duty today. We got the stream here, and then he's over there on stream.
Yeah. Yeah, he'll be back in just a little bit.
We've almost seen 2% down today on the NQ, but kind of seems to be finding a double bottom here. Be interesting to see if we get a little bit of a relief bounce.
Yeah. Sorry, guys. You almost hear that every stream. The dogs barking at some point. Sorry about that. Here, and so real quick.
Hey, at least it's not trash day.
I know. I've actually gotten good at reminding him the night before so that he doesn't have to run out in the middle of the stream. So, yeah.
How's it going?
That's all right. All right, here's John.
Oh my goodness. All right, guys. So we are here. We got Powell about to speak live right now. Let's get this rolling here. I know the last time it said it was like a Zoom. Let me see. I mean, all these places at once, guys. Let's see. I'm here to just give you guys free content. Look, this is what I'm here for. I want to make sure you guys can hear. Is there any audio playing from this?
No, not that I can hear.
No. Yeah, you don't have audio right now. They also say I'm coming in a little hot, too.
Pon said they also said that he's coming in hot.
Hot meaning loud?
Loud, yeah.
Okay.
Yeah, loud.
Well, you're kind of low. I was listening to you on the other stream. You're a little low. You got to get closer to the mic or something. Here, I'll turn you up a little bit, Carol, so that you're not so low here.
Okay, yeah.
Is Carol too? I mean, the mic
Yeah,
is
I
up
had
a
to-
lot. You got
yeah.
to speak into that thing. Yeah.
Okay. Yeah, they told me that before, and I did it for like a minute, and
I
then I
know.
forgot. Sorry.
Here, I'm gonna turn your volume up. There you go. Tell me if that's better. Speak.
Hello.
Is Carol louder now? She should be.
No, I'm.
Yeah, the leaf blower. And if the leaf blower gets too loud, baby, you can just click this bottom.
Okay.
You know. I can hear him too on my end, man. I told Carol the freaking lawn guys would show up right when we're doing this. We got 2.5 minutes left.
I doubled your account.
Okay, I saw them telling you to tell me that as well. So I would love that to be the truth, but I don't think it is, you know.
Oh. See, he knew right away. I don't have a good poker face.
Oh, I'm on it, dude. I'm on that. Okay, hold on. Where is launch meeting? Open in Zoom meetings. There it is right here.
There's so much stuff happening on this screen. I don't know how you manage all of this.
Oh, I know, man. This is my life. Trying to see they still haven't started this yet.
You want me to just, when they do?
Yeah, Franco, he will share it live here, so you'll be able to see everything.
Yeah, we're gonna stream Powell live right here. Yeah,
Y'all trying to get me in trouble.
Look, we're gonna stick this right here so you guys can see it. Oh, they're definitely trying to get you in trouble. That's what they do.
That's what chat's good for.
We're gonna put it up right here. And then we'll actually stretch this a little bit larger. There we go. Put gold and Bitcoin. I'm gonna put the NASDAQ up here actually. I'm waiting for them to start it up. Here, hold on. Let me check sources. Yeah, so again, payroll's coming in hot. Yeah, we're here. We got Powell speaking. We got the president speaking again. Here they are. All right, the timer's done. Here, no, that's the timer.
Okay.
Yeah, well, sorry, guys. We're still waiting on this to start. Are they late? I see y'all talking about jiu-jitsu over here, too.
Yeah, they asked me if I was tired of hearing about it. And I said sometimes.
Oh, she freaking hates it, dude.
But I'm glad that you're passionate about it. And
Yeah.
you look great without your clothes on, you know.
Oh, well, that's good. That's a great thing to tell the stream. Thanks so much.
Since you started doing jiu-jitsu, I mean, I have no complaints.
Yeah.
I'll take it.
I wish they would start on time. I kind of needed them to start on time today. Okay.
It's kind of glitching.
Hi, we're about to get started. Can
We're
you
in there.
please silence your cell phones so that they don't go off?
All right, so just
I'm
sit here,
Anil
man.
Kashyap.
All right,
I'm
guys,
one
let me know
of
if the volume is
directors of
good.
the Clark Center that hosts this conference.
Volume good?
And
Sounds
we're delighted to be able to host Chair Powell. The run of show is going to be that he'll make some opening remarks, then we'll have a moderated conversation, and I think he needs no introduction. So please join me in welcoming Chair Powell back to the U.S. Monetary Conference.
Thanks very much, Anil. It's great to be here and see a lot of familiar faces. I'm glad that it turns out we don't actually have a majority of the FOMC here, so we can speak to each other without violating the Government of Sunshine Law. So I have some brief remarks about the economy and the path of policy, and then I look forward to our discussion. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place. The labor market is solid, and inflation has moved closer to our 2% longer run goal. At the Fed, we are intently focused on our dual mandate goals given to us by Congress: maximum employment and stable prices. Turning to the recent data, the economy has been growing at a solid pace. GDP expanded at a 2.3% annual rate in the fourth quarter of last year, extending a period of consistent growth that has been supported by resilient consumer spending. Recent indicators point to a possible moderation in consumer spending relative to the rapid growth over the second half of 2024. Further, recent surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. Sentiment readings have not been a good predictor of consumption growth in recent years. We continue to carefully monitor a variety of indicators of household and business spending. Turning to the labor market, many indicators show that the labor market is solid and broadly in balance. The jobs report released this morning showed employers added 151,000 jobs to payrolls in February, and the unemployment rate ticked up 0.1% to 4.1% last month. Smoothing over the month-to-month volatility, since September, employers have added a solid 200,000 jobs a month on average. The unemployment rate remains low and has held in a narrow range between 3.9% and 4.2% over the past year. The jobs to workers gap has narrowed, and the quits rate has moved below pre-pandemic levels. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. With wage growth moderating and labor supply and demand having moved into better balance, the labor market is not a significant source of inflationary pressure. For inflation has come down a long way from its mid-2022 peak above 7%, without a sharp increase in unemployment. A historically unusual and most welcome outcome. While progress in reducing inflation has been broad-based, recent readings remain somewhat above our 2% objective. The path to sustainably returning inflation to our target has been bumpy, and we expect that to continue. We see ongoing progress in categories that remain elevated, such as housing services and the market-based components of non-housing services. Inflation can be volatile month to month, and we do not overreact to one or two readings that are higher or lower than anticipated. Data released last week show that total PCE prices rose 2.5% over the 12 months ending in January, and that core PCE rose 2.6%. We pay close attention to a broad range of measures of inflation expectations, and some near-term measures have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain stable and consistent with our 2% inflation goal. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. Policy is not on a preset course. If the economy remains strong but inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our mandate. Before I conclude, I'll note that at our last FOMC meeting, we began our second 5-year review of our monetary policy framework. We will consider changes to our consensus statement and to our communications as part of this review. The consensus statement articulates our framework for the conduct of monetary policy in pursuit of our statutory goals. We will consider the lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. The 2% longer run inflation goal will be retained and is not a focus of the review. This public review will be familiar to those who followed our process 5 years ago. We will hold outreach events around the country involving a range of parties, including Fed Listens events. We're open to new ideas and critical feedback. We will host a research conference in Washington in May. Our intent is to wrap up the review by late summer. Thank you very much. I look forward to your questions, Danielle.
All right. Thanks for that. Before we get into the current conjuncture, is there anything more you can share about where you think the framework is going to land? It was nice to hear the parameters that you laid out, but is there anything more that you can say beyond what you just?
Sure. So I said there are two things really. There's changes to the consensus statement, and then they're looking at really our post-meeting communications. We're going to look at those two things a lot. And as it relates to the consensus statement, which is also known as the Statement on Longer Run Goals and Monetary Policy, therefore it needed a shorter name, we are going to be looking a lot at the changes that we made in 2020. So if you go back to 2020, what we had was we'd been at the effective lower bound for 7 years. We never got rates above 2%. We were at 1.5% when the pandemic hit. And the feeling very much was that if even a mild downturn came, we'd be back to the effective lower bound, maybe again for years on end. So we were looking for ways to try to minimize the likelihood of that. And a pretty standard result in the research was a kind of a makeup strategy. So that's what that was. So the framework changes that we made were very focused on the importance of the effective lower bound problem, which was thought to be the big problem at the time. And those were the changes that we made. And we thought that those issues would be persistent, but the universe had other ideas. And the pandemic arrived just a few months after we implemented the framework and really changed the whole mixture. And effectively the idea of an overshoot, of a modest overshoot or moderate overshoot of inflation really became irrelevant. And we were back to the regular framework, and we did what we did, and you have the results today. So I think we'll be looking at, for example, the focus in the consensus statement. We'll be looking at the focus that we had on the effective lower bound. It's probably not the base case anymore, but it's probably still relevant. We'll be looking at shortfalls, which is an interesting idea, and there are different ways to express that. And we'll be certainly will also be looking at the idea of having a moderate overshoot of inflation over the 2% target following periods when inflation has been low. We're looking at all of those things, and again, I expect to be done, by the end of the summer. On the communications, particularly our post-meeting communications, we're going to take a close look at the SEP and also compare ourselves to what other central banks around the world do. And this will be a couple of weeks from now. We'll have our second meeting, and I think we'll be done in time for sort of the end of the summer.
Yeah, that's great. Let me pick up on this question about the level of prices versus the inflation rate. Economists spend a lot of time making the distinction between the rate of change and the level. I'm not sure that the public fully understands this because you see these surveys about how frustrated people are with inflation. Inflation now is not that different than your target. It's above, but not meaningfully so. But do you think that price stability needs to take into account how far you wear away from the objective? And if you've had a big run up and the level remains high, even if the inflation rate is back to normal, is that something we need to reconsider?
The public experience, what the public experiences is the prices of things. And the prices of things went up a lot in 2021 and 22, and to some extent in 23. And when we talk about inflation, we're obviously talking about the rate of change now. But the public's not wrong. They are experiencing high prices, and obviously you can have a great labor market, but if people are really struggling because of high prices, that's what they're really going to feel. So they're right about what they're saying. In terms of, I don't think there's any need to redefine price stability. I think you can always go back to the way Alan Greenspan said it. I won't get the exact words, but everyone here knows the idea is if businesses and households are making their economic decisions without having to consider the possibility of high inflation, that's price stability. I don't think we need to rethink inflation the way we deal with it. I don't think we need to reinvent price stability. So,
okay. Okay, the elephant in the room. Economists normally assume that a tariff is passed into domestic prices. And as the Secretary of Treasury said yesterday, that would change the level of prices once, but wouldn't mean anything for inflation a year later. If we're looking at what happens over the next year, how would we know if the conventional view is not correct and that it's leaked into something more troubling?
So I think that start with the general thought is that if there's a spike in prices that's a one-time thing that is going to go through the economy, then it's not appropriate to react to it because our policy by design will reduce employment and activity, and it would not have really been needed to be done. So you look through those things if you can. So if you put that in the context of tariffs, you know, I think if you look at where forecasts are, look at the blue chip, look where everybody's forecasting some inflation effect from tariffs. So it's very likely that you know that if tariffs are imposed, and let's remember we really don't know what's happening yet. We're at a stage where we're still very uncertain about what will be tariffed, for how long, at what level. We're going to have to wait to see all of that. But the likelihood is that some of that will find its way. You know, it'll hit the exporters, the importers, the retailers, and to some extent the consumers, and we'll see what that is. And in a simple case where we know it's a one-time thing, you know, the textbook would say look through it. But I think the situation you would want to also be sure of a couple of things. One just is that if it turns into a series of things and it's more than that, and if the increases are larger, that would matter. And what really would matter is what's happening with longer term inflation expectations and how persistent are the inflationary effects. You want to look at all of those things, and you'd want to remember the current context, which is we came off of very high inflation, and we haven't fully returned to 2% on a sustainable basis. So you got to put all that in the mix as you make this decision. I would point people back to 2019, you know, when we had the Tax Cuts and Jobs Act, we had lower immigration, and we had regulatory policy under President Trump in the first regime, and you know, we wound up cutting 3 times because growth weakened so much. So there are many effects of tariffs. And as I pointed out, it's really the effect of all of these policies that matter for our policy. It's not simply what's happening with tariffs. It's what's happening with growth and all the other things as a result of these broad changes in economic policy, not just tariffs.
Okay, just to put a point on this, I think I know what you're going to say, but the usual rule that economists hold is that when an uncertainty is high, we're gradualist. And I'm wondering whether you view that as the right benchmark or anchor to think about.
I view it as the right benchmark or anchor for right now, and that's because the costs of being cautious are very, very low. You know, the economy's fine; it doesn't need us to do anything really, and so we can wait and we should wait. I think there are cases where uncertainty is high, where that would not be the case, where the costs of going slow might be high. And those would be, for example, you know, if inflation expectations were clearly under pressure, or if you're at the beginning of the pandemic and uncertainty is unquestionably elevated, but you nonetheless act very aggressively because of the potential cost of not doing so.
Okay, that's interesting. But I'll ask a couple more conjunctural questions, but there's a lot of people in the room here that are very curious about what you want to say about the Basel III endgame. So that's inside baseball, but people's wallets depend on this. So you want to say anything about that?
Sure, absolutely. So our view at the Fed is we very much intend to complete the Basel III endgame. And we think that's very important. We think that the Basel Accords really are important to set sort of minimum standards for international banking around the world. And we expect that we will. We're kind of on hold until the U.S. banking agencies are really back up and running with new leadership. But once they are, we fully expect to get back to that work and complete the Basel III endgame. And I have a good reason to think that we'll be able to do that.
That's good news. Another little bit of inside baseball, but there's been a lot of discussion in the last few weeks about changing some of the statistics that are emphasized about the economy. And the Commerce Department recently disbanded the Federal Economic Statistics Advisory Committee. And I know during COVID, you felt like there were many indicators of the economy that were kind of broken or not so helpful. So do we need to worry about whether the Fed's ability to do its job might come into question because of deficiencies in the statistics? And are you already, let's do that. I'll ask a follow-up.
Yeah, so there's two different things. I think it needs to be said that the government data we get from government gathered data we get from the Bureau of Economic Analysis and the Bureau of Labor Statistics is incredibly important and really the gold standard for data. Being able to track what's going on in the economy is very, very important, and it's something that the United States has led in for a long, long time, and something we need to continue to lead in. It's true that survey responses have gone down, and that some of the data have become more volatile. That just means it's something we need to keep doing and invest in. So I think that's important. On the pandemic data, that's a different thing. You needed to measure things like how many people are going to restaurants, how many, you could look at open table data and things like that. So there were lots and lots of pieces of data we were getting about that showed how many people are coming back to work, riding the subway and that kind of thing. And that was important. It turns out all that data isn't super relevant except in an emergency. The other thing is, though, at the Fed, we've always for some time now, we've been trying to work with these very large data sets that are available in real time now, for example, from credit card companies and things like that. And trying to use these new and vast data collections in a real-time way, is something that's really helpful.
Okay, I was going to ask you about whether or not there's some favorite private sector statistics that you think everybody should be looking at, but it sounds like you've just given us a hint on that. Let me ask a couple longer term questions. I know you're not in the job of reflecting yet, but when we look back at the rise of inflation and then its decline, what do you think the lesson's going to be about what we've just lived through?
Yeah, so I think it's actually still early to say. I think the question of what happened and why, and what all those questions around the events of the pandemic and the inflation and the efforts to bring inflation down. Economists are going to be battling over that for long after all of us are gone. But I would say a couple things. One thing is just that the tails are fatter than you think. However fat you think the tails are, they're fatter than you think. And human nature is, we always talk about uncertainty and how we understand everything's highly uncertain. We say it all the time. The tails are fatter than we think. So nobody saw the pandemic coming. Obviously, it wasn't reflected in our framework. When it came, we just went back to the old framework and dealt with it. But it was, there's always possible. That's one thing. Secondly, I think if you look, I talked about this at Jackson Hole last year. If I look back and it looks to me like what you had was a global burst of inflation everywhere at the same time, and largely you got to look at global factors, and it amounted to very strong demand, stronger than we thought. I don't think we had, the forecast error was two parts. Part one was demand was just stronger than we thought. It really was. We had in mind the recovery from the global financial crisis, and instead we got this really high-powered response, expansion, recovery. So the other side is the supply side. The supply side was constrained. We lost 8 million workers, and it took a long time to get them back. And it was also all of the supply stuff that was happening. That took longer than we thought to unsnaggle. And we'd never seen it before. We knew in real time that it was going to be really hard to get that right. But so those two things created inflation globally, and central banks stepped in, and pretty broadly, we're back to close to mandated inflation and employment close to the natural rate, not just in the United States but everywhere. So in a way, the framework worked, but I think we learned some of those lessons, and we'll still be learning them.
Okay, one other question in this direction. The the U.S. has actually had the fastest recovery of all the major economies. And do we understand why that is? And does that, there was a question in the last panel about Y star and potential growth. Do you think that we are learning something now about what the speed limit for the economy is, or is this just happenstance?
Yeah, I would put down the US's outperformance to three things. And the first is just one would be structural characteristics, and that's more flexible labor market, highly developed capital markets, culture of innovation, rule of law, all the things that make this. And we have a venture capital industry. Other countries are trying to do early stage financing out of banks. That's not going to work. So all of those things make us account for 40 years of productivity. That's double Europe's productivity. It increases. So that's thing one. Thing two is just population. We had a big population increase in 22 and 23, and that doesn't help with per capita, but that moves top line. And what was the third thing? Oh, productivity. So we had a really significant burst in productivity, and from a range of factors, you can never tell exactly where it's coming from. Some of those factors suggest, this gets to your last question, suggest that productivity will be kind of a one-time event. So, people were wound up automating a lot of functions in retail, and because people didn't want to work in retail anymore. But that may just be a one-time thing. Technological developments, on the other hand, might give us years and years of productivity. So there are a whole bunch of other things, and so we don't really know how long this burst in productivity will be sustained. But I think I never expected to see productivity this high for this long. And our staff is marking up their estimates of potential growth for now and taking some signal about the future. You won't have that population thing going forward, but productivity has been really strong, and I think it does actually raise, at least for the relatively near term, the level of potential output.
Okay, that's good. Okay, 30 years of teaching Booth students, I've learned you have to end these things with a fun question. So who's your favorite central banker? And I'll give you a hall pass on anybody that was on the board while you've been there.
What defines favorite central banker? Living?
You can constrain to living, or you can specify dead.
Well, I mean, I would have to, I don't know.
Open-ended question.
I'll take the easy route and say Paul Volcker, whom I did know over time, and pretty obviously in central banking, nobody wants to be working in a central bank when inflation is really high, but everybody who works in a central bank knows what they have to do when inflation is high. And he set the gold standard for that. That is the thing. Most of the time for 40 years, we haven't had to do that. It's just kind of demand management through a regular cycle. But when you have very high inflation and you have to do this is why we're independent. It's not for the good times. It's for the times when we're doing something which may be unpopular. That is our assignment. And I think Paul Volcker kind of established that. That was really not quite so clearly established at the time. So I'm going to go with Paul Volcker.
Okay, I'm going to out you on a private conversation, but I don't think you're going to mind too much, which is the Cork Center that hosts this event has a bunch of experts panels of economists where you can go ahead and answer a bunch of questions. They'll tell you who your favorite economist is. And Jpow's favorite economist is Anil Kashyap.
Let me tell you, it's a true story, and that was not a happy day. To learn that,
Anyway, well, thank you, and we're so glad that you were able to be here and share your thoughts. And
Great.
So,
Thanks very much.
yeah.
All
right, guys.
Here.
Oh, here's John.
right, guys. So that is it for today. How did she do? How did Carol do? Did she do good? She didn't like cut it midstream or anything. She kept it out for the whole stream, right?
I think I did.
Yeah. Carol made the market green. Way better than the usual guy. Hey, that's okay. No rate cut. She kept cussing. Hey, guys, listen.
Y'all getting me in trouble, huh?
If you want to help support the channel, check out Top Step. Top Step, great way to learn how to day trade. Most day traders lose, right? So if you put up 5, 10, 20, 30 grand trying to day trade, let's be real, you're probably going to lose it. Instead, try a funded account program. Top Step's the most legit. They give you a 50K demo. If you can make 3K in profit on that 50K demo without losing $2,000 first, following their rules, they fund you 50K with a 90% split, and that's similar to funding your own account. Most day traders lose. And so if you pass the test and then make 30 grand, you can then withdraw and fund your own account. You get a 90% split. You get to keep your first 10K in profit. And if you fail, you're out $50. It's a pretty good deal. They're an affiliate of mine. I am biased because I get paid by them. One of the most biased traders of all time ever in the world right now. But if you want to check them out, a great way to learn how to day trade. If you use my link and you use Top Step X as your platform, you get 0 commissions, which means you can trade micro contracts, trade very small with micro contracts. And it just makes sense, guys. Understand CFTC 4.41. If you want to check it out, here's the link. I'll put it up right there. Maybe I'll trade a little bit for you guys, too. There's the link in chat. Here, baby.
So you good?
Yeah.
All right, y'all. Thanks for having me. Good luck, everyone. Y'all have a good weekend, all right? Ooh.
Thank you, baby. Good job.
All right. Ooh, I can't.
Oh, is
Yeah,
it getting
I'm
you?
stuck in there.
Oh, I'm sorry.
All right.
I'm sorry. All right. So how did she do? Did she do good? Best live ever? Good, man. NASDAQ's been pumping up on Powell, but look at this redness showing up.
All right, hey. I'm going to go get Jack.
Okay. Yeah, look at this redness showing up. I got the biggest headphones of all time. These are definitely the top 3 largest headphones I've ever seen. I'm sorry I made you wear these, baby. We need more Carol commentary. Listen, I'm here. And again, we were on Top Step TV just now. Man, look at this dump, dude. Wow. We actually just made a good bit here. Powell must have said something the market didn't like, bro. We got that 200 exponential here. Whew, guys, so I just made about $250 day trading. I'm sorry, I didn't even show you guys this. But I just made about $250 day trading here. Shorting this 200 exponential moving average on Top Step. This is Top Step right here. Look at this gain. You'd love to see it. I lost a little bit on Top Step TV, and then I just made it back. Look at this. 55, 29, 76, 70, 77, 22. So we're green everywhere, basically, guys. Yeah, the speech is done. I think, right? The Zoom ended. He's not still speaking, is he? Let me make sure. I'm pretty sure he's over. He started like... No, he's over. The speech is over, it looks like. Yeah. President speaking. Yeah, so he's done speaking. So he's over. Anyways, let me know how Carol did, man. Carol seems to do okay here. Maybe we'll have her do the other one. The president's speaking right now too, huh? Yeah, I saw 3,000 people watching. Yeah, I'm catching back up in the chat. Whatever, this guy talks 90% of the time. Yeah, so it looks like the market liked what he said to a certain extent, but yeah, isn't the crypto summit today? So yeah, next week, guys, I'm gonna close it down. Next week, just to put this into perspective, though. Next week we have. Make sure we got this. Next week we got Jolt's job opening reports on Tuesday, core CPI and CPI inflation index on Wednesday. Thursday we got PPI inflation. Friday we got Thursday we got PPI inflation. Wednesday CPI. Tuesday Jolt's. Friday we got consumer sentiment for March. Inflation expectations are the other thing that comes out there too. And then the week after that we got a whole gang of stuff coming out too. So it's a big week, a big day. Y'all be good. He didn't really say much. Yeah. I mean, it was a small time speech. But listen, guys, again, if you want to check out Top Step, great way to help support the channel. I just made a couple $100 here. We are now green on the day. Let me see what we're green. We are now green on one account about 250, the other account about 91. So all the way green here, man. So we'll take it. Green is good. We run about 60% accuracy, but green is good. I'll take it. If you want to check out Top Step, trade with me. Here's the link. Appreciate the love. Most people are saying this didn't do much. No, I'm not going to stream that. There's the link. It's too political. If you want to check out the link, there it is. Top Step. They're an affiliate of mine. I am biased because I get paid by them. Understand all this stuff on screen. I'll see you guys later. Y'all be good. Have a great day. I'll see you guys next time. I'm not angry. I'm happy. Who's angry? No, I'm not streaming the Crypto Summit either. I'll see you guys later. Y'all be good. Next week, I'm going to be streaming CPI. The week after that, we're going to be streaming the NVIDIA GTC conference. Bunch of stuff from March. I'll see you guys later. Y'all be good.